Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Thursday, May 12th. Concerns about the pace of the global economic recovery are hitting stocks around the world, as well as commodities prices. Investors are also digesting some mixed economic data, and earnings news out of the technology sector is weighing on equities. Let's start with this morning's economic reports. 44,000 fewer Americans filed first-time claims for unemployment benefits last week, partly reversing a big spike in April. However, economists had expected the number to decline even further, and the 4-week average of jobless claims, a more accurate gauge of employment trends, rose to nearly 437,000, its highest level since November.
In other economic news, retail sales increased by 0.5% in April, their 10th straight month of gains. But the details of the report were mixed. On the positive side, sales in March and February were revised higher. On the negative side, April's results were not as good as expected, and the increase was largely due to higher gasoline prices. Surging gas prices also accounted for a rise in wholesale prices last month. The Producer Price Index jumped by 0.8% and are up 6.8% over the past year, the largest 12-month increase since September of 2008. Excluding volatile energy and food costs, the so-called core PPI rose 0.3% in April, slightly above expectations. Tomorrow, we'll get a reading on consumer prices and Reuters and the University of Michigan's gauge of consumer sentiment for May.
While rising energy prices affected last month's economic data, we're seeing a different trend play out this month. Crude oil is falling another $2 today to around $96 a barrel, after losing nearly 6% yesterday. That prompted the CME Group to briefly halt trading to allow the market to settle down. The declines came after the International Energy Agency reported that higher oil prices are resulting in lower demand, especially in the U.S. But while rising prices are causing most Americans to cut back on other expenses, they're also resulting in record profits for energy companies. That's the topic of discussion on Capitol Hill today, as executives from ExxonMobil, Chevron, Royal Dutch Shell, BP, and ConocoPhillips go before the Senate Finance Committee. Senate Democrats and President Obama want the companies to give up the $4.4 billion in government subsidies they receive each year. But the oil industry and many Republicans say the tax breaks allow more exploration and production in the U.S., increasing supply and ultimately lowering gas prices.
In addition to crude oil, other commodities are also losing ground today, as the dollar strengthens against most major currencies. Silver has been the most volatile market recently, tumbling nearly 30% last week before recovering a bit this week. But it's resuming its downward momentum today, falling 6% right now to $33.50 an ounce. Meanwhile, gold is dropping well below the $1,500 mark. Another reason for the decline in commodities is China's reaction to rising inflation, which threatens to cut into demand from the world's second largest economy. This morning, the People's Bank of China raised the ratio of funds domestic banks must set aside as reserves, the 5th such hike this year. Overnight, the country reported that consumer prices rose 5.3% last month, a bit milder than the increase in March, but still above the government's target level.
We're keeping an eye on a couple stocks this morning. Cisco Systems is falling nearly 5%, dragging down the technology sector and the broader market. The company reported an 18% drop in profit and issued a weaker than expected forecast for the current quarter. Cisco also said it plans to reduce expenses by $1 billion in the next fiscal year, which likely means layoffs by the end of the summer. Both Robert Baird and Canaccord Genuity downgraded Cisco on the news, and JP Morgan said its next few quarters may be worse than expected. But Goldman Sachs thinks that Cisco's earnings per share may have bottomed and will improve into 2012. Finally, Kohl's said first quarter profit rose 6%, helped by strong online sales and Easter shopping. The department store's earnings and revenue figures were both in line with estimates, and the stock is up about 1% in early trading. That's the latest from Weiss Research. Have a great trading day.